The one change that we can highlight for the rest of the year is that profits, if anything, will probably go up in the second half of the year, given the higher inflation and rates backdrop. The first half of 2026 was dominated by many events and fast-changing macro assumptions that basically were hard to predict and quite easy to adapt for our strategies. The one word for banks and financials in general in this new world of higher interest rates is stability. What is underpinning this stability is sound fundamentals that have been rebuilt over the past 10 years and very strong profitability. Net-net, the one change that we can highlight for the rest of the year is that profits, if anything, will probably go up in the second half of the year, given the higher inflation and rates backdrop. Overall, especially in credit, for financial credit, we see spreads being stable to slightly tighter. We see an unparalleled carry versus quality opportunity, which is difficult to replicate in any other strategy in the world. While we're approaching a second half of the year that will again be rich of events, the midterm elections are difficult to predict and will probably provide changes to the assumptions that we can make today. We feel very comfortable on financials and the backdrop for the same reasons that we had a year ago. So risk-reward for financials and banks in general remains very, very attractive. Our positioning remains average, meaning we're not overstretching on longs. We consider the previous vintage of additional tier ones in particular to be more valuable than the bonds that are coming to market today, where tighter reset spreads will be much more volatile if these conditions will change one day. However, risk-reward remains favorable and we remain very comfortable and confident in the future prospects of the investment strategy.